So we have buy side here. And then what I'll be watching is this wick midpoint here. You see we've traded up into the midpoint of that wick here. If we're going to be strong, I want to see us get above that. So we'll see what they give us here in the 9:30 open. Let 9:30 paint the narrative for us. But that's what I'm looking for top down. Damn. So just at 9:30, running off without me. I like how we opened at 9:30, dropped down below sell side, was going to look to take a long in here, and then ride it up into these highs here. All right, so here's our first presented gap. I want to see if we can drop down into that. That'd be a nice discount for them to potentially recapitalize on and take it higher. All right, so we're going to look to take a long here inside this breaker. Going to keep it low risk. Stop below here. Trimming risk here. Don't want to see it come back down into that 15-second fair value gap. Using just some swing projections to see how high we can go above this old high here. That stops me out there on the balance. Reduce risk. Didn't get the follow through I wanted to see on NASDAQ. So going to be patient now. All right. Displacing through these lows and through that first fair value gap. That's not bearish, right? Or sorry, that's not bullish, right? That's starting to indicate bearishness. I'm going over to NASDAQ. Man, so the silver bullet hour starting with the bang. Man, don't want to be on the wrong side of something like that. All right, so clearing out sell side here. I know no one likes to hear this, but that's why I always talk to you guys about not being over leveraged, especially in the climate that we're in right now, right? You don't want to be in 2-3 minis and then 100 handles goes against you. And like I said, I know a lot of you guys just trade sim accounts, but you know that would even hurt on a demo account, you know, on the funded accounts as well. But man, especially on a live account, man, you really feel that because man, that's your hard-earned money. That's a sting. So again, just another reemphasis to why you don't want to be in over leveraged in these market conditions because the market can hurt you and it can hurt you badly. Because if you're entering here and you have a stop here and it just gaps down like this, like in 1 second, the market makers just said, we want NASDAQ here. So in this 1 second, you're looking at a 1 second candle here. If you have a stop loss here, those orders aren't getting filled until you're 100 points down and then it's getting filled down here. And, you know, in a few minis that even I would feel that one, right? So trading up into two of our targets, that daily swing high, that obvious swing high we're looking for here, and then breaking down, right, selling off. So based off what we're seeing here, may want to attack these equal lows down here. All right, so now we're below that hourly gap that we had. Remember the hourly fair value gap that we extended through? We're now below that, using it as resistance. So my attention goes to these equal lows here now. All right, new 5-minute candle opening here. So I want to see, can they take it up into that 5-minute fair value gap? All right, it's going in 5 micros. Take profit down here below the lows. I want to see this act as an inversion gap here. Sell off from here. All right, so we want to see speed through this low here. Boom. There you go. All right, pretty easy stuff, guys. Let's go up to the NASDAQ 1-minute chart. All right. Waited for the 5-minute candle to form. Wanted to see, could it trade up into the fair value gap? I've already said this before, but if you haven't noted it down, please do. If we have a PD array I'm looking for, right, in this case, the 5-minute fair value gap, and we can't even get up into it, that's telling me the market is extremely weak. You know, when we're looking for a fair value gap or any gap when we're using gap theory, we want to see a trade up into it, fail to reach midpoint and break down. That tells us what? It's really bearish. Well, if it can't even get up into the fair value gap at all, what do you think that means? It's really heavy. And if I'm shorting, we want to do what? We want to short a market that's really heavy. This is what tells you that. 1-minute chart. We have that hourly inversion fair value gap here, right? That when we're bullish, support springboards higher. When we're bearish, It does what? Trades up into it. Told you guys I want to see it uses resistance, and I want to see us reject it. As soon as we do that, that then gives me an easy short using a lower time frame fair value gap here into the sell side. And that adds about 50 handles, so decent price run there.